So one of the biggest account killers that no one really talks about is overtrading. I see many profitable traders have an amazing day but let it all go to shit. Now, why does this happen? Well, it happens because of human nature. People are aggressively trying to reach the next level without having any proper restraint, and that leads to many different issues, problems, and so forth. A lot of the times, what I firmly believe based on mentoring a lot of people is that traders are trying to get back the money that they have lost in the past. What is important to remember here is that every trade that you take is independent of what happened in the past. It doesn't matter if you lost $10,000 2 years ago, 100,000, 1 million. That does not matter. Every trading decision that you make has to be based on the technicals, your risk management profile, and so forth. So today what we're going to be focusing on is the account management aspect for today's session, and go over how you can figure out what is appropriate sizing for you based on your risk tolerance, based on your trade size and your goals. So this is a couple of things how I do it, and near the end we're going to also go over the trades that we have taken today, go over our predictions, and also share some insights on some stocks and details. So let's go straight into it. So first of all, this is a very basic Excel template that I've made here that can kind of help you. Now, we're going to be assuming that, if you're trading a small account, how can you figure out what's the appropriate amount of capital you need to put into each trade? What is your goal, and so forth? Because setting a goal is crucial. A lot of the times what happens is that traders may have a fantastic day, they make a lot of money, and if they surpass their goal, they still jump in. So having a goal in mind will definitely be the key thing that you want to look for. And if you focus on winning consistently rather than trying to look for those home run hitters, you will definitely do better more often. So it's important that you win as much as possible than lose. Consistency is key, because in trading, the longer you can survive, the more likely you're going to find those key trading days where the news is established, the market is easy, and you just got straight hitters nonstop. So you want to make sure you're still around to trade for those great opportunities, like we had them last week when the market was selling off. Okay, so let's assume you're trading an account that has $5,000. So if you have a $5,000 account, let's just say, for example, you put that over here, you got 5,000 bucks. The total weekly budget that you want to have, in my personal opinion, is 20%. Okay, so that's going to be your weekly budget. Okay, meaning that that's the max of cash that you're playing with. Okay, even though you have $5,000, you're only allowed to trade $1,000. So having that budget means that you cannot exceed that in any single trade. Okay, so what this allows you traders to do is pretty much ration on their budget, meaning that for the total duration of the week, you cannot have more than $1,000 in the market. You cannot, lose more than $1,000 in the market. That's your given budget. That's going to be set in stone, and it's very important that you have that. Now, usually I'd like to set it at between 10 to 20%, depending on your account size and so forth, but you can adjust this based on however you feel, right? So what is the amount that you feel comfortable risking during the week? Different weeks with different opportunities are available, so you can always adjust this. So if we set it at 5,000, 20% of that is 1,000, meaning that you're only playing with $1,000 the entire week. So that's step number one. Step number two, this here calculates automatically how much is a max size per trade. Okay, the way that was calculated is divided the weekly budget by 5, and that is pretty much the maximum size per hand, because I'm assuming you're going to be using that $1,000 for 5 different trades. Now, that doesn't necessarily mean that you're going to be doing only $200 trades. You can do less if you wish, but you want to make sure that you do not trade more than $200. Okay, you can do pretty much, let's just say, $50, $100, $150. There's a lot of trades that you can buy for that amount, and it's very easy to find. The next thing here is the target rate of return you're looking for, okay? If you are starting your trading journey, I always recommend that you take profits between 30 to 50% on all your trades that you're taking. They're very common, they're very easy to find. I also recommend that you avoid taking swings, so you want to really wait for the right setups, okay? If you are struggling finding the right setups for small accounts, we share them all the time in my room, and you can definitely go for that route. So you don't always have to take profits at 50%, let's just say, but you pretty much have an idea. This is just a rough estimate. So let's just say if you want to put this at 50%, you got that 50%, that means your weekly goal should be $1,500, which is definitely possible. Sometimes you may not reach it, that's okay. And your daily goal is 300, okay? Meaning that if you made $300 in a single day and you're looking for the next trade, just avoid it, take it easy, and you don't need to go that step ahead, okay? Establishing these goals is going to help you prevent overtrading, and it's going to help you set targets and goals in mind that will help you reach the level of success you're looking for, okay? So this here is what you pretty much need to do moving forward if you're trading a small account. This here is pretty much the parameter. Sometimes you may get 450 or 500 certain days, that's totally fine. If you have met the $1,500 goal during the entire week, that is awesome. Whatever you do, you pay yourself that $1,500 and any excess you can leave in your account, because what I firmly believe is that when it comes to trading, your trading account should pay you and you not pay it, meaning that you shouldn't put money into your trading account, and that's going to be the key element you want to know, okay? So just keep that in mind moving forward. Now the next thing I want to talk about is the situation for today's trading journey, okay? Now the reason why I'm talking about this today is because we have a lot of new members in the room, and these new members just want to make money real fast. Nothing wrong with that, and a lot of people do. That's why they take up trading. But it's important to remember that if you are forcing trades and you're rushing into it without setting goals, you're going to get chopped up. Now in my mentorship program, I give the tools and the information necessary for you to understand when it's time to push the brakes or pull the gas, okay? The perfect situation is in my daily gamma reports that are here. So going over this here, I pretty much mention what's happening in the market currently, and we talk about the call gammas, okay? The call gammas, I said, shows very bullish thing as possible to break above 5460 during this time. The S&P 500 was around 54.55, and I mentioned that we could go higher. What we need to see is SPX hold 54.40 and 54.50. If you look at the chart on SPX today, you can kind of see that it did manage to defend that today, and that was part of the reason why the market held, okay? The next thing we spoke about in this situation was that it's showing a limited range. The market is bearish under 54.20, and that it could go there. But I said there's no bad news or anything that changes the market that suggests that we will continue to run. I also gave a warning here as well, and a prediction, okay? So I said although call gamma's bullish, I said be cautious of sell-offs, okay? That happened today. We had it 2 times where we've seen the SPX drop more than 20-30 points. If SPX can break above 54.6, we may see higher inflection points referred to our levels. So we gave the levels as well, and I gave a final prediction on this where everyone is becoming bullish, and I believe we may see some bearish price action even with the bullish action. Reason is there's no real positive news that it has changed the market sentiment, okay? So that's very important. That should tell you that you really want to make sure that you take your profits whenever you get a chance. So based on your goal, if you get into a solid trade, take your profits and move on to the next situation. So top news and headlines for today, just to recap you guys, we had the Apple iPhone event. That event, it was pretty much meaningless. They're showing the same product over and over again. And you know, one thing I took out of it is that they're not really charging for AI. And I thought that activity was pretty much bearish. And either way, different story. ARM was a key thing that we were looking at because that was the Apple AI's you know, supplier for their chips. They didn't actually mention that during the event. I'm not sure if I missed it or not, but I didn't see that happen. We got PLTR and Dell that got added to the S&P 500, and pretty much, as you guys may know, I gave that PLTR trade, so that was up nice as well, and Tesla high vehicle sales as well. Okay, so besides that, we gave all our daily levels here on SPX and SPY. Right around here is when SPX started to really struggle around my level 1 bullish. And the key trades ideas that we gave is we spoke about that ARM 125 possible entry at 2 to 2.5. That was a perfect setup because that was an awesome trade that if we go to our winner circle over here, you can see we got around 2.48. It actually went a lot higher, went to around 4, close to $5, so that was a winner. We also had S&P 500 calls. That was a nice winner that we took profits on as well. Okay, so just to show you a little bit about our trades here, I pretty much did, you know, fairly well. Right off the bat, you know, we sold our PLTR calls, took profit off that. I decided to play calls on that, and you know, we sold the calls. We had ARM calls as well. So if you guys made profits off the 2 first trades, even the PLTR swing, all of that, you pretty much hit your goal. Okay, so if you're a small account trader, whatever the case is, you should stop right away. All right, you shouldn't force it because it's a chop market. And we also gave some awesome trades on SPY. These went to exactly 0.4. There was a nice double. And QQQ puts, this only went up 30-40%, which is totally fine. Now, the next thing I want to talk about is, besides us warning you that it was going to be a very choppy market, how do you know exactly it's going to be a very choppy market? Now, I spoke about this during my morning calls. This here is my weekly analysis that I give to members in my room. It's all time-stamped. If you're watching this for the very first time, you can see that I gave this information last night over here. And we'll go over the stocks one by one just so we can highlight the level of transparency. So this was my initial chart that we gave at pretty much the beginning. On SPX, you know, if you're trading in a chop range, take your profits early and pretty much forget about it, okay? There's only one put trade that we messed up on, which was fine. We were still profitable at the end of the day. But overall, you want to make sure that you take your profits in this chop zone on SPX. Another trade that you're looking at right now is if you go on Tesla, okay? So Tesla here, we pretty much spoke about this, that it hit my inflection point right over here. You know, during this level 1 area, it's a great opportunity to pretty much short if you want. And you can see Tesla stopped right exactly, you know, very close to it. 219.87 was its high of the day. We gave it at 220, our level 1 bullish. SMCI. So SMCI had a strong day, okay? Pretty much it broke out over here, and once it got through my level 1 bullish, it started to really move here, okay? News of SMCI denying claims about the fraud allegations, okay? So that came out earlier today too. Nvidia, we avoided Nvidia because it was trading in our chop range. The premiums weren't moving so much. AMD, you can see that it pretty much stopped near my level 1 bullish resistance point here. We didn't look at Broadcom. LRCX, I was looking at getting calls here, but I couldn't get the fill, but it pretty much bounced right at my 722. This was a perfect range to get into calls right off the support. You can see that 723 was the low of the day, off by 1 point. So very accurate numbers here. Dell got added to the SPX, still in my chop range, nothing going on here. No, it did not hit any inflection points. And PLTR pretty much moved. Once it broke through my 33.8, that's when the stock started to really pop, and it's now in our bullish breakouts. Possible it could go to 36 moving forward. So that is very interesting to see here. You know, we spoke about a lot about the account management stuff. and we shared a lot of insights moving forward. Now, the final thing I want to end up here to talk about is that when it comes to trading, you know, the first 2-3 trades, if you nail it, take it easy, your day is done. Okay, you can still monitor the markets, that's totally fine, but you want to avoid trading the market when you're trading in the chop range. Okay, when you have all this analysis and tools right in front of you, you can become successful and increase your chances of success. Take our mentorship program, test it out, because once you see how the behavior is at different inflection points, you will get a good understanding about what's happening today and how you can do very successful, because we give a lot of insights and a lot of predictions that will help you become successful as a future trader. Thank you for tuning in, and we'll see you guys in the next one.